Yes, I am in a short position right now on Bitcoin, and in this video, I'm going to explain to you why I took this trade, what would change my bias on the chart locally, and also what are the next best opportunities in the market where you can have a position and hold it for maybe the rest of June or maybe the rest of summer. So, I'm going to give you some levels, I'm going to give you my analysis, but before I do, I have to explain to you what we were looking for last week on the chart because it's so crucial to understand, so crucial to actually grasp what happened in this range right here before we move on and try to explain to you what we are having on the chart right now, because the narrative that we had last week is completely different than what we have this week. And the reason for that is because until this point, until we had this breakdown on the 29th of May, we had a pretty easy to grasp structure on the chart. And that structure was a bullish structure, obviously, because we started from $74,000. We had an uptrend and we had a range, another uptrend, another range, and another uptrend, another range, and one final uptrend and another range on the chart as well. And when you see this and when you see another range forming here, obviously the smart thing to do is expecting higher to come on the chart. It doesn't mean that you have to be overly bullish on the chart, or it doesn't mean that you have to just have a stance where this has to go higher, but when you have this structure on the chart where the price has been going higher for the last 2 months without actually touching any support level that is crucial, it's just smarter to look for higher on the chart. But this structure broke down for the first time on the 29th of May of last month, basically, 5 days ago. And this was a crucial time on the chart. And the reason why that is so crucial is because we had a major level of support that I've highlighted for you last week. That level was a daily level that was sitting at $105.5 thousand right here. And this level was extremely crucial to the market, and I'm gonna actually find it fully so that I can explain to you why this level was really crucial to the chart. So this one right here was the daily level that I was looking for maybe over a week, maybe even once it was formed. I knew that it was going to be an important level because it was going to be shaping the uptrend that we have on the chart. And as you can see here, when we came down to that level, when we were testing it, this was the one and only support level we had on the chart, where it was the highs of the last consolidation zone. It was a breakdown of this range that was for 7 days long. And when you test this level, you don't want price to come down and form another range right here. And the reason I say this is because when you have a consolidation on the chart like this one right here, you want price to come down, take the lows, have a failed auction, have a swing failure pattern, and then push higher on the chart. So if price were to come down and hit that daily level and then was able to reclaim this range like this would have been a bullish scenario on the chart, because just like any other scenario that we have on the previous examples, it was just a liquidity grab. But unfortunately, that was not the case for Bitcoin this time. This was the level I was watching with all of my eyes, and unfortunately, the level did not get respected, and then we had a breakdown from this level. And at that point, I knew for myself that okay, well, we just showed a major sign of weakness on the chart, but this does not mean that we will go down, because if this level is able to get reclaimed one more time, it doesn't look that bearish anymore on the chart, because we have a major level and we go below it. And if we are able to reclaim that level, at that point, it's kind of neutral. It means that the chances of us ranging around that zone or maybe going higher with weakness on the chart is still there as an option. But unfortunately, what we did afterwards was the reason why I took the short position on the chart. As you can see, after losing that daily level on the chart, we went up again with this ascending channel continuation pattern on the chart, and we tested this level 2 times. On the first time we tested on a Tuesday, and then the second one we tested, both Tuesdays, but we tested once in the morning and then we tested it again to push above it. But this was crucial for me, where I was not looking for long positions here, not because we were just looking bearish, but also because what TPO was showing me on the chart as well. I wanted to see a daily close above this level, because if you see a daily close above a major level that you have lost previously, a couple days ago, then that looks a bit more like a failed auction, a bullish failed auction on the market. Unfortunately, that was not the case for this level right here. What we did was, if I open up the TPO chart right here, you'll see what I was seeing on the chart exactly as well. We have spent a lot of time, not just on $106,000, but also around $107,000 on the chart as well. But after spending that much time, both at the lows and the highs of that day, so here we can see the TPO graphic right here. You can see how this is the amount of time spent on each level, and you can see that all of these levels have around the same time spent. You can think of it as like a POC graph, point of control graph, where every level looks like a point of control. There is not a big discrepancy on the chart, or there is not a certain level that is sticking out on the chart. And when I'm saying sticking out, I'm talking about levels like these, where you can clearly see that this zone and this zone is where most of the volume is. I mean, not volume, but you get what I mean. And on the same example here as well, you can see that this is where that fat bulk volume is, and this is where that fat bulk volume is. But unfortunately, that was not the case for this one. We saw the price come up and spend a lot of time at the highs and a lot of time at the lows at every single level. So when you see a TPO graph like this, where price spends a lot of time at every single level on the chart, what matters the most is where the price finishes the day. Because if the graph was looking like this and the price was able to finish the day around $106.4 thousand, this would have been a bullish close, a really bullish close, because we would have had a day where the value is trying and testing many levels on the chart, but then finishing it at the highs, which would have been a bullish scenario. But unfortunately, that was not the case. So what we did was we tested that level twice, first in the beginning of the day and then after around the New York Open, and then we have came down and finished the day at the low zone of that value. So at that point, when I saw this, I knew for a fact that okay, now the chances are we will most likely going to be pushing for lower on the chart, simply because we have tried to go above a level that is obviously important to the chart, and we were unsuccessful in that idea. And this was not my only confluence on the chart. I want more factors that I can actually take, and I want to make sure that I'm not just relying on TPO, but I'm relying on the other factors that I have on my chart as well. And if you want more factors, I can show it to you with CVD and open interest on the chart as well. The graphic last night and yesterday was extremely clear for me, and I was sharing that with my team on Discord as well. And if I open this up, you'll see the same thing I was seeing as well, that with every new lower high that we're putting it on the chart here, you can see that the CVD was keep going higher. This is a CVD graph right here. I'm going to get rid of this one right here, and you can see that the CVD at this point are here, and then as we're going and pushing with these lower highs on the chart, we keep putting a higher CVD, and a higher CVD right now on the chart as well. So there are more people who are buying the market right now than it were at this point, but the price is around, how much is that? $1,700 lower. Do you think that is bullish or bearish on the chart? And if you want to add more confluence to the chart, these are not just buy orders in the market, but you can clearly see that the open interest is increasing during this period as well. Open interest at this point started with $1.58 billion, and now it's hovering around $1.61, $1.62 billion on the chart as well. So there's obviously been more people joining the market, and those people are long in the market, but unfortunately they're not being able to push the price higher on the chart. So for me, those two confluence factors, when you have people joining the market, but they're unsuccessful in trying to impose their bias into the market, and also you're closing a day in a really bearish way, technically, at that point it becomes hard for me to say that the price is going to push for higher on the chart. And with all of these factors combined, there is one more factor that I want to talk you through as well on the chart, which is that we are seeing a clear consolidation pattern on the chart as well. So as we talked about, when you see a pattern like this on the chart where the price is consolidating, it's usually what is bullish on the chart is for price to come up and go higher, or have a failed auction of the lows and then just push higher. But if you are seeing the price push and have a range like this, which you can see as well, it's a really easy range to find here, and after this range you are seeing another continuation pattern, which is a parallel channel on the chart. I mean, an ascending channel on the chart. Now it becomes a lot harder to go on the chart and say that this is a bullish continuation on the chart, because this is a classic way for price to top out on a macro scale. It doesn't mean that this will be the cycle top or this will be staying there for the next 4 years, but how it's looking right now on the chart is that the price is looking like it wants to take these lows one more time. And if that is not enough confidence for you, which again might not be, right? You might still not be bought about this idea that we could still go for higher. But to add to my thesis on why I think lower is more likely here, I believe that if I show you these lows right here, you will be able to see why I think that these lows will be cleared soon as well. If you know about TPO, good. If you don't, again, I'll explain it quickly to you because it's hard concept to fully grasp here. But how I view lows and highs on a chart is I like to see single prints below and above the highs on the chart. So are we seeing single prints, or as we call them, buying and selling tails at the highs and the lows of a chart? And this is extremely crucial to the market, because when you have a high or a low on the chart, you want to see excess on the chart. So you want price to go there and be bought up back really quickly on the chart. And usually what happens with the highs and lows where the price is being bought back in really quickly, you usually have this pattern right here where you fill a, or you put in a fair value gap at the highs. So you have this 30-minute candle right here where you can see that there is 76 single prints right here. With this high that we put in right now, we have 89 selling tails here. With the low that we have 76 buying tails right now, even though this day is not finished yet. But I'm gonna make you look at the lows that we have here as well. So this is the low that we put in on the 31st of May, and you can see how small that buying tail is on that low, and you can see how close that is, those two 30-minute candles are on the chart. And not just that low, but that's the same for this low right here as well. Again, you can see how small that buying tail is on this chart. So we have two lows back to back with basically no buying tails on the chart. And for me, this is a clear indication that these lows were not bought by a big player on the chart. It was put in by retail. And I think with all of the combined with everything factored in together, where we have CVD divergences on the chart, we have open interest increasing, people are longing the market, we have seen price breaking down a major support level on the chart, and also having weak lows on the chart, that's why my thesis was that we would go down this week. So I hope I made everything clear for you. I know that most people are not used to having this much information thrown at them. You know, in most cases that you'll have a Twitter guru just telling you that this is a channel, just trade it. But that is not how I do things, and I love more detail, I love more information, I like data a lot, and this is why I think that lower is more likely on the chart, and that's why I took this short position on the chart last night after having this swing failure pattern of the daily highs on there as well. And now I'm in this position, and I'm fortunate enough to be able to hold this position and also hold a long position from $102.8 thousand from here as well. So I am basically long from the lows, and long from the lows and the short from the highs on the chart right now, which is a pretty blessed situation to be in. And again, good things that I can prove these things to you as well. These are not things that I'm just saying now. I have shared these setups with my team on Discord yesterday as well. Here we can see that if I go on this Trader AG Bitcoin analysis section, you'll see that this was a trade that I took, and I shared it with the team at the time I was taking. We cleared the week high I showed you on daily market update, and now we have 2 week lows below us. I took a short position aiming for those lows next. So these are not things that I'm sharing out of the blue, or I'm saying it in hindsight. I've shared this trade setup with my team at the time as well. And not just that, but I'm also fortunate enough to have a long position from Ethereum and also on Bitcoin from $102.8 thousand as well. So wherever the price goes next, I will be making money on the chart, and that's an extremely blessed situation to be in. And the only way you can be in that situation is actually having enough data in your hand to have conviction in your trades. And I've built that up for the last 4 years. And yeah, if you want to learn about those, join the tag team. I don't like to pitch it aggressively usually, but man, like we teach some good stuff. All the things I've taught you so far, I didn't even use TradingView. Like these things are actual technical analysis, and you need these if you want to be consistently profitable if the market goes on and ranges for the next 3 months. It's easy to trade when the prices are going higher, but it's not that easy to trade when market is going sideways and market is changing structure, and you have to catch that structure change. And I believe I'm one of the best to do it in the market as well. So I mean, the link is in the description. So what am I looking for next on the chart? This is a really important thing that you might ask me, and I'm going to get rid of this because now you know that this position is real. I'm going to be making you look at certain things on the chart, which is really important to me. I think the number one important thing here is that this consolidation zone have now been tested multiple times. It's not just been tested at the break of this zone right here, but now it has been tested one more time here as well. And we have not just tested the highs of this consolidation, but we have also tested the POC of this consolidation as well, as you can see. So I'm going to get rid of these as well. And you can see here that we have tested the point of control of this consolidation as well. So we have tested the highs, we have tested the point of control, and for me, when both of those levels fail to have a great reaction on the chart, what usually ends up happening is either the value area low gives out a reaction to go higher, or the ultimate lows have a reaction that we might actually take a long position on the chart. Again, do I know which one will act? No. Do I care? Again, no. But all I know right now is that I am not interested in longing the market at this zone right now because it's a zone that has already been saturated. The price have tried those highs, the price have tried this point of control, but it's not finding much support on the chart. And we are clearly putting an ascending channel right here, which usually is a continuation pattern on the chart after we see a range and a break, ascending channel, break. So what I will be looking for on the chart is for price to come down, hit this value area low, and then reclaim this POC level right here, and maybe that will get us in a long position on the chart. But I like the chances of us going down and actually pushing below this low right here a bit more, because I believe that that gives us a better opportunity and that gives us a better trading level on the chart as well. Because if the price pushes down and takes these lows right here, I think that is a position where it could sweep and it could get out a lot of people in the market. So what if that happens? So let's say the price pushes down and is able to get down and hit this NPOC, a point of control level, a time point of control level that we have on the chart, and then is able to reclaim this range low right here. I think this becomes a great opportunity to long the market, because a lot of people have been flushed out of this market who have longed the market since the 8th of May. So that's why I think this is a great position to look out for on the chart. And if this happens, if price is able to come down and hit this level, I do believe that it won't be a case where we just have a V-shaped recovery. I think it will take longer on the chart, and it could be something like this for the rest of June. I wouldn't be too surprised if we have a consolidation, another consolidation, and a third consolidation before pushing higher on the chart. So that is what I'm looking for right now, and it doesn't have to happen, but this would be my ideal long position on the chart as well. So this 99,520 is the level that I'm watching on Bitcoin right now. So with that being said, what would actually get me in a long position in the market when if the price reverses from here? Just like at the lows right here, I can still switch my bias, because my bias or my ideas about where the market will go, they are not, it's not a chaotic thing where I have to look for short, or the price has to go down here, or the price has to push down, or the market is wrong. I can change my bias really easily. And for me, the way I would change my bias is I would look for price to invalidate my thesis that the price is more likely to go down right now. And for me, how it could do that is if we have this channel right here, as I talked about, and the channel broke down, and then now we have this consolidation pattern and ascending channel right here, like this. If I see the price, or let's put it from here, why not? If I see the price being able to reclaim this ascending channel low right here and push higher and actually able to reclaim this ascending channel high, at that point my thesis would be wrong. Simply because my idea right now is that we have seen a consolidation pattern. The price broke down a major support level on the chart and then had another consolidation, and now the chances are we will most likely push lower on the chart because we have weak lows on the chart as well. But if the price is pushing higher and the weak lows are staying on the chart, I'm not going to be obsessed with the idea that the chart has to go down. So that is my stance on Bitcoin right now. I hope I made everything clear on the chart. If you want to know more about these concepts, because XO charts and everything, I truly believe there is no better tool in the market to use. It's the most advanced idea, and it's the best tool in the market, and we can see now as well how it worked out perfectly here. I showed you the CVD divergences that was happening on the chart literally as I'm making this video. You can see it here as well, that the CVD was going higher on the chart, the lower one right here, while the price was making a lower high, and now we're pushing lower. These things are not luck. These things don't happen just because the price is pushing lower. It's that every candlestick that you see on the chart packs so much more information that you probably think. So if you want to learn more about these, go on the tag team. We don't just have an amazing community. Again, the Discord channel is amazing. I'm on there 24/7 basically. I post my trade ideas, I post everything that I do, but not just that, but we have an excellent educational section as well. I've not met any single person that has gone through the education and said that it's lacking information or it's not up to date. I teach you about range trading, I teach you about XO charts, about tools and indicators that I love to use, and also risk management and psychology as well. And there's so much more to come on the chart as well, and there's so much more to come in the tag team as well in the next month or so. So that is what I'm gonna say. And if you want more of me, join the tag team. I'm on there 24/7, or you can always go to my Twitter profile as well. I'm on there sometimes, like a couple hours a day. And yeah, if you want to trade with me on Bybit, I'm officially partnered with them. They are the best exchange in the world. I've been using them for a long time. I had no problem with them. Use this link right here that you can see on the description and also on my Twitter to get VIP1 fees for the next 30 days and also deposit bonuses up to $30,000. So thank you so much for listening to me. If you have a question, please let me know in the comments, because I can see those. I will answer to you if you have any comments. And yeah, thank you so much for listening to me. I will see you in the next YouTube update. Bye bye.